Miss Andrea. How are you doing?
Good morning.
Good morning. Good morning. Did you have a question or a comment this morning?
Yeah. So when I pay my mortgage, I pay it all online and it says, the amount that I owe, how much you want to do it. But it also says like towards principal, but then also says escrow. How do I know how much my escrow is? And do I want to pay that off first?
Can I just teach you what the escrow is about?
Of course.
Okay, the escrow is a bank account they set up for you so that they take the part of the payment that goes for taxes and insurance. That money goes into that savings account. And then they pay your taxes and insurance out of that account every year. That's what the escrow is about.
Okay, easy enough.
Okay.
Sounds good.
All right, now here's the thing. I just told you that I'm your bank, right? And I'm going to do you a favor. We're just going to make it easy for you to pay your taxes and insurance, okay? So I'm going to set up an account, a bank account, where you're going to put money in, and it's going to sit there all year long. And guess how much interest I'm going to pay you on that money?
I have no clue.
Zero. Zero. I'm paying you nothing. Who benefits from your money that's supposed to be paying taxes and insurance sitting in a bank account? Who benefits from that all year long, from that money sitting there?
The bank.
Exactly. So is it really a favor when we escrow our taxes and insurance?
I guess it's not, but is it a negative?
Well, listen, if you took that money, could you set it up so that you're paying the same amount, but you send that money for taxes and insurance to your own bank account where you pay your own taxes and insurance? Would that benefit you more?
Yeah.
Okay, because you can get the interest off of it, couldn't you? I know it's a little bit.
Yeah.
But it's better than getting nothing. And what if I could show you how to leverage that money while it's sitting in the bank waiting to pay your taxes and insurance? I can show you how you can leverage that money so you can pay less interest on your loans because you chose to pay your own taxes and insurance. How would you like to learn that trick?
I would like to learn that trick.
Yeah, I thought so. All right. So listen, write that down. Let's get together on that. Okay. So what else did you want to understand about your mortgage?
I mean, I'm just listening in. I just want to, pay it off, fairly fast. My mortgage right now, what I have left is $206,000.
Mm-hmm.
Unfortunately, my rate is low. I think I have like 2.95 or 3%.
Right.
So I'm listening in, I'm like, wait, I thought I got a deal.
Oh my goodness. Can we put your information on the screen?
Absolutely.
All right, let's do that. All right. So your loan, how much did you borrow?
My house is more than this, but I borrowed like $220. I've only had the house for 2 years.
Okay. So about $220,000. And your interest rate was what? You said 2.9?
Yeah.
And for 30 years. So here's what I'm seeing. I'm seeing that you have a principal and interest, the part that is not taxes and insurance. I'm coming up with around $921. That is the part that goes, that's principal and interest payment, $921. The rest of your payment goes for the taxes and insurance. Okay, Miss Andrea?
Yes, I pay about $1,200, a little over $1,200
Okay,
a month.
that's about right then. Okay. So when you take a look at your mortgage statement, do you get a mortgage statement each month?
When I say statement, it's just all online. Like I just go in and pay.
Okay.
Like it doesn't say like too much of a breakdown. It just kind of says where do you want to pay, where, what, you owe money on the first. That's basically it.
All right, but what you can do is go to the online, is go to where your statements are. Click on the statements and you can see how much of your money goes to principal and how much money goes to interest, okay? Your very first payment, here's how it breaks down. About $380.78 went to the principal. That is how much you owe. Okay, the principal part is what you borrowed. $380 out of all the money you paid went to pay down the loan. $540.83 went to interest. Here's my question to you, Miss Andrea. Do you think that's fair?
No.
Okay, so you've been in about 2 years. So can I add up 2 years worth of principal and 2 years worth of interest? How about that? You ready?
Yes.
Okay, so in 2 years, $9,400 went to principal. That's paid down your loan, while $12,716.94 went to interest. Should it cost $12,700 to pay down your loan by $9,400?
No.
Okay.
That sounds ridiculous.
All right. Now, this is what everybody does. Why do we all do it? because we don't get the education. And listen, I'm going to applaud you right now. For having the courage to ask the question and to learn. All right. So I'm going to teach you right now, just in a couple of seconds, how to save interest. What my program does is it actually guides you like financial GPS to tell you exactly what to do for you in the right month on the right day of the month. But can I give you just some basics so you can understand how you can attack your loan?
Yes.
Okay, so let's say in the first month, we're taking a look at the first month, and let's call it January. You make your payment in January, $380.78 goes to principal, $540 goes to interest. But if you have an amortization schedule, you can see next month's principal payment. That would be February's principal payment. I have here that the next month's principal goes to $381.71. That goes to principal next month. And your interest drops to $539.90. So here's my question. If I can see what I'm supposed to pay next month, which is the $381, do I have to wait till next month to give the bank that $381?
I don't think so.
Okay. So if I gave it to them early, if I had it, I'm just saying if I had it, I could give it to them in the same month, couldn't I?
Yes.
And if I did, guess what? They would subtract that from my loan immediately. $381.71 is subtracted from what I owe, and I don't have to give them any more interest that month because I paid my interest already for the month. How about that?
I'm like, sign me up.
All right. And so now I'm paid down to line 2 on my amortization schedule. On my schedule, I'm paid down to line 2, where I owe only $219,237.51. So I'm paid down to line 2 in 1 month. How about that? And guess what? There's an interest payment on line 2, $539.90, that I never have to pay. You just killed that interest amount just by paying early.
But can you pay more than 2 months? Can you look down or no?
Look at you, Miss Andrea. Without even seeing the numbers, asking the right questions. Yeah, let me call out to you the next 3. How's that?
Sounds good.
So if I make that payment on line number 1, the next 3 principal payments are $381.71, $382.65, and $383.59. You can pay all 3 of those if you wanted and knock out the interest cost on those 3 lines. You would save $539, $538.96, and the $538.02 worth of interest you never have to pay. That's over $1,500 in interest you never have to pay. And you just killed 4 mortgage payments. And now you're on line 5 of your amortization schedule for the next month just by killing those 3. That's a very good question.
So let's say that I got in a bind. I paid 3 mortgage payments in a row. Let's say month 2, I couldn't pay again. Is that okay because I'm already paid up?
That is another good question. You can't pay in advance. You have a mortgage payment every single month. So never think you can pay in advance. What you're saving is time and you're saving interest, but you have a payment every single month. You just have fewer payments by doing this.
Okay, that sounds good.
How do you like that?
Yeah, I definitely would like maybe someone reach me out to me, or if I can reach out to you guys somehow for some information.
Okay.
That would be nice.
All right. So what you could do is hit me up on my Instagram and scroll down to my Instagram either way, and then just send me your name, your email, and phone number, and someone will reach out to you and we'll get you started. How would you like to know the month, day, and year you could be debt-free on your mortgage and all of your other debt?
No, that would be good. I'm going to follow you right now, and then I will message you when I get off work today.
Excellent. Excellent.
But Don has some valuable information that can contribute to the quality of a person's life. And it only costs you a few dollars. It's his book. Why not get that?
I'm going to go through the P.I.L.L method myself with some of my investment properties. So I'm going to link up with Don, and then I'm going to sit down with him, show him my investment portfolio, and see how I can eliminate interest.